Good morning, everyone, and welcome to the PivotBoss pre-market video for Friday, September 10th, 2021. I am Frank Ochoa, aka PivotBoss. Here's a look at the daily time frame of the ES. You'll see right here the ES has been on a multi-day pullback here over the course of the week. Lower highs and lower lows day over day. Right now we're seeing overnight strength, overnight and pre-market strength that has pushed price nearly back to the previous session's midpoint of 45.07 half. That's going to be an area here that after the morning pullback here, that morning or pre-market strength, will we see another round of late day weakness from that? And if so, how far down do we go? So again, given the fact that we are in a short-term downtrend, pullbacks in the morning tend to be faded, especially into that midpoint, and if price cannot find a way to push through that midpoint at some point, we likely see another rotation for new lows ahead. So we could be looking at another round of weakness ahead if price cannot reestablish back above 45.07 half fairly soon. Also keep an eye on the previous week's low price of 45.02, hanging around that level. Again, if there's a failure to hold above 4,500, that could begin to rotate things down for the day. Now, again, as we've mentioned, even if we were to pull back a bit deep, it's still an opportunity to pick it up lower and push it back toward highs and through those highs into 4,600 ahead. Right now, got to see how far down do we go before we find that significant rejection day. All right, let's take a look now at the NQ. NQ continues to develop that narrow range up here. This is about as narrow a range that you will get. We were on 7 days yesterday. Now we are on an 8-day developing narrow range. It is narrow by a 10-day standard as well, but if you just capture just these narrow 8 days, again, 191 points of range, there it is right there. You have to really go back pretty far to find any stretch of days that are that narrow. It's just very difficult to do. So right now, a very, very narrow range of trading. Obviously, the market cannot stay within that super narrow range for long before some sort of expansion occurs. Given the overall trend, again, the idea is that we could see some sort of downward expansion first, similar to what happened back here, followed by some sort of rejection that leads us higher into the next level of prices above. So again, very narrow right now. Look to fade the edges with an upward bias, but at some point we got to get below 15.5 and see expansion, or we need to get through the 15.7 and see expansion. All right, let's take a look now at crude oil. Crude oil right here, currently up 2% today, 1.94% at the moment. You'll see a range that has developed over the last 13 days developing now. So a 13 developing narrow day or narrow range. So let's bring that up over here, up to 13 right there. And again, this will quantify it, 62% of average right here. You'll see it visualized down at the bottom here. And that's, again, significantly compressed against the average. Now, the fact that this thing is forming at these highs and at this upper trend line here is, again, something to watch out for, because at some point when we break out, which way will it be? Will it be a nice breakout to the upside that takes us back to the previous quarter's close and high? Or do we fail to hold 67s here and drop down back toward recent lows, or perhaps through those lows, staying in line with this downward slope? So this major trend right now, could be broken here. The downward trend that we've seen in this channel could be broken to the upside if it can finally find an acceptance through that 70 level, which we've been talking about. But so far, no dice on that front. We'll see how it plays out moving forward. But again, needs above 70 or below 67 to get out of this narrow range. All right, let's take a look now at gold futures. Gold right now trading in a narrow range here today, for the most part, 50% of average, under 12 points of range. Narrow 3-day range overall. a hard recoil off the upper end of the range. We talked before that the target, after this strong low developed, the target was likely going to be back to 1760 very quickly, and then if price can get through 1760, it was going to open up 1835 to 1840, and we got that. But we also mentioned once it gets to 1840 here, that zone, it was probably going to get smacked down as it has before. That level has been significant resistance, clear CLVN, and we're still on a path downward. So today's failed new high that's developed here, right here above 2-day highs, suggests more weakness could be ahead, especially if you start to push back below the previous day's midpoint. That opens up 2-day lows, perhaps a bearish outside day. So right now it's still flowing to the downside as we approach 1760. Once we get to 1760, major CLVN, the bottom of this market structure, the idea is another bounce back up could be seen within this trading range, as we are now within that previous range and holding. So flowing to the downside with the potential to bounce off the 1760 zone ahead. All right, that is it for now. We'll see how this plays out heading into the weekend. Have a fantastic Friday, a great weekend, and I'll see you in the trading room. Take care.